and none of your friends get confused. Options, because it's something. Really? Options? You want to talk about options? Okay, I enjoy talking about options because it's something that everybody wants to play with, and nobody has a clue about what they actually do or how to use them. So they.
Dude, what the hell is this guy talking about? Jesus Christ. People should not go on YouTube when they have no idea about what they're talking about and come on. I guess that's basically the point of YouTube, though, is that people come on that have no idea about what they're talking about. Just because you say the word options in like 3 different pronunciations or 3 different tones doesn't mean you should be making a video on it. This guy's basically saying he doesn't really know what's going on and that he assumes nobody else really knows what's going on. But fortunately, there's relief for you because many people know what's going on with options. And if you don't know, then you shouldn't be making videos. The guy is talking about there's a zero-sum game of trading or something. All right. Anyways, welcome back to the Short Vol Show Live. This is a live stream format discussing a lot to do with the VIX term structure, the financial markets, current events, and whatever else seems to pop up that day. Like my freaking hair's popping up. And I just want to make an announcement here. I am working on this series, SIBO back in the day videos, and I'm probably going to start to distinguish between a live stream type thing, which is like ad-libbed and just coming on a live stream with my green screen behind me here. I'm going to try to distinguish between that and a more produced video like the SIBO back in the day videos and I kind of want to just switch completely to, there's the green screen behind me, by the way, if you're interested. This is what the room looks like. There's a whole room with lights and all kind of craziness. Anyway, I'm probably going to distinguish between videos like this and videos with that are more produced and pretty much stick to the videos that are more produced. I like doing this stuff, but the problem with doing this sort of videos is they're kind of like a one-shot deal. Like it's going to talk about what's going on that day and that sort of thing. But overall, they don't age well because nobody cares the next day what happened the day before. So my focus is going to be to make content that is watchable over and over again, that will help you in general about trading. But I still really enjoy doing these live streams, so I'm going to keep it coming as far as they're concerned. But you should be able to tell from the title whether it is a back in the day video or a live stream type video. Yeah, I just I'm trying to step up my game and learning more about making stuff. I'm hiring a wedding videographer guy to help me make some videos so that I can have more than like a one-man crew and produce some stuff that looks a little bit more professional and ages better. The other aspect of that is I am working with another YouTube channel that's much more successful than this one to consult and kind of show me the way a little bit, which is exciting. I did get pretty good response, though, for that SIBO back in the day stuff, and it seems like you like when I tell stories of trading, making or losing a lot of money. Possible topics that I'm going to address coming up are fist fights on the floor, talk about some well-known fist fights, talk about like when new people come on, the kind of stuff that practical jokes that gets put on them, practical jokes that are done to them. People would put like little stirrups on their shoes and then start singing Rawhide as they walk by. They would send people around for this uptick box. Anyway, there's a whole bunch of other aspects of the floor that were unique to the floor and are interesting, but that also apply to trading today. And one of my big themes lately has just been that if you gain your trading knowledge through online means, it's possible that you're going to have some holes in your knowledge. Now, gain your knowledge any way you can. I certainly don't look down at anybody for however they came into trading. That's great. I know a lot of people came into trading through like a Tim Sykes classes or some other sort of like penny stock route. Other people came in through, Jason Bond. A lot of these advertised things, or Ross Cameron, a lot of these advertised things that have been very successful online, it turns out are not really respected in the professional world. And there is once again a big lack of knowledge and lack of basis for people to learn about trading and things like that from professionals. Most YouTubers are YouTubers. They're younger kids, and they're just trying to come up with anything they can say to stay in front of the camera and to get views. And as I said, it seems like the people that are successful at like making a video are not necessarily the same people that are successful at trading and explaining about trading and the trading world. So there's a big void there, and I want to be part of the solution to that, to fill that void a little bit. And as I said, we have a long way to go. A lot of trading stuff that you see online is just people telling you how much money they made today. Oh, great. That's like a lot of that Ross Cameron stuff. I made $2,800 today. That's awesome. Now that doesn't, I guess that would motivate you. You're like, oh, wow, I want to make $2,800 too. But it doesn't really show you either A, how to trade, or B, how to trade. And it's hard because the way I was taught was I was given a bunch of different ways and methods, and I was told to draw from a lot of different ways people do stuff to develop my own thing. And I hope I can sort of fill that in for some other people out there and just add to their toolbox of things to do, because I know people get this feeling that like there's some hidden knowledge out there, and there's somebody who like once you learn how to look at this chart, all of a sudden that's going to tell you what's going to happen in the future. And the actual hidden knowledge is that nobody knows what's going to happen. That's the hidden knowledge. And once you realize that, you are sort of freed from your chains a little bit. All these guys that are talking about the charts and that this is a double, this and that, and the other thing, they might have come up with something that works for them, and they might not even actually completely understand or be able to express in words what it is that they've latched onto that helps them make money. And thus, just watching them from the outside, like looking at a chart or having them describe it to you, isn't necessarily going to tell you what it is that they're latching onto. And it's funny, the things that people latch onto as far as momentum trading and just recognizing a situation that happened before and that you've seen happen several times and then reacting to that, that same recognition and feeling can be expressed with showing a chart. It can be expressed with showing volume, time and sales in a lot of different ways. But the sum total of a trader's knowledge when they are in the moment in a live trading situation is very hard to transfer to somebody who's watching on the side, because it's that sum total of somebody's experiences and knowledge and everything that is guiding them at trading. And so if you're just sitting there with a person and you're looking at the same chart they are, it's not going to translate to you. That's the real challenge for us to teach people. So anyways, in my little world, I had a great win yesterday in this ICPN. That's so funny. It's like the symbol eludes me, even though it was a big winner for me yesterday. All right, let me look it up then. And as I pull up my charts, I can find trade history account statement. ICPT. All right, so if I pull up the chart of ICPT here on stock, on Thinkorswim, you're going to see, you don't want to see that. You're going to see the various options months right here. And to the right, there are, let me see if I can center this a little bit better. Let me make sure I'm not in the way. That's not going to help me. See, this is why I want to do more produced videos, so that there's not these like holes and waiting times. All right, so okay, so you can see on the right here, there's these numbers next to each month, okay, and it says 99%, 78%, 70, 78, 67, 66, 64, 59, 61. Okay, and so like as the months go out here, they go down slightly. Well, that's not what this looked like 3 days ago. 3 days ago, this looked like front week 270, second week 200 something, third week 200 something. And then when you got out to April, April was like 160 volatility, and then June was like 110 volatility. So 50 points, but difference in volatility between April and June. Right now there's like 1 point difference. And then when you looked at SEP was like 85 volatility. So you had 85 volatility in SEP and 150 in April. So what I did was I bought the SEP that was 85 volatility, and I sold the April, which was 150 volatility. And so the spread, when you looked at the calendar spread, the SEP 120 call was like $35, and the April 120 call was like $32. So there was only $3 difference between the months. Now if you look at it, the April 120 call is around $5, and the SEP 120 call is around $12. So it went from there only being $3 difference between these two to there being like $6 or $7 difference between these two. And so that is how I made money. I bought this spread for $3, and then it became worth $7 overnight. And the reason for that was everything was way cranked up and way out of line because they were awaiting this news on this study. And I don't think that not many people were trading these months at all. It was very low volume. You can see the open interest is really low here. And so me coming in with my measly 2 or 3 lots here and there didn't really move the market, and I was able to put it on. And although this was a long Vega trade, I was long like 100 Vega, and volatility did come in. It went from 85 to 60 in this month. The thing was that the April stuff that I was short came in way, 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 way more. And so that Vega number, the Vega number really would have only been accurate if both of these months were the same volatility, really. And they weren't. They were vastly different volatility. So so that's the scene with ICPT. It essentially doubled my trading account overnight, which was great. And but you know, I'm not here to talk about my wins or losses. If anything, I'm here to talk about my losses because, you know, I was taught you don't learn anything from winning. You learn stuff when you lose. A, and B, I don't want to be like those other people online that's like, oh, you know, whatever, you should have listened to me. That's ridiculous. You know, why should you take your hard-earned money and do with it what one random YouTuber tells you to do with it? that I wouldn't recommend that to anybody. I try to give you some insight into my thought process with trading and my thought process when approaching different trades. And hopefully what you can gain is some insight into the thought process of a trader, and then you can use that to approach your own trading situations. I don't suggest to you that you just piggyback onto my trades. In that case, if you had, it would have worked out well for you, but other times it might be a total disaster. Anybody who follows me for a little bit knows that I don't win every time. No trader does. When you see somebody online that wins all the time, they're lying to you. And some people like being lied to. They're going to follow these channels because they like the dream, and they like being sold the dream. And the guy in Hawaii with the Ferrari sitting by the pool, and he day trades for 10 minutes every day and makes $20,000 and then goes back inside. I guarantee the guy that's out there doing that is making most of his money by marketing his videos, not by actually trading. I am a position trader, and thus my trading style is not one of in and out of trades in one day all that much. It does happen sometimes, but not really. And it takes more thought than just 10 minutes a day sitting in front of the computer. And, there are people out there who are successful day traders. It's not all just a myth. Some people that they are good at that, they do that, they make a living from that. And I'm not one of those people, and I can't tell you how to do that because that's not the way my mind operates. But there are people that do make money day trading. The concepts of options trading in theory apply whether you're day trading or position trading or swing trading overnight, as they call it. All right, so let's get on to the VIX for a second. Excuse me. Volatility has come in a lot lately. It's been going down the slope, and the question is, when does the slope end? And there's no way of really knowing. Let's pull up the chart. Okay, there's the VIX, and let's go to 1 year here. Okay, so we see the big pop. Let's see if I can make... All right, so we see the big pop. Am I in the way? Yes. Technical difficulties. There we go. Okay, so we see the big pop to 36, and then we see it coming back down. Now, when is it going to stop coming back down? I don't know. How should I know? Nobody knows. People can make, draw lines on this chart and say, oh, well, there's a curve and, descending pyramid, this and that. But that's all just guesswork. We don't know when it's going to end. We do know that it was definitely a good short up there, and people who have just been hanging out short for a while have made money. Certainly it could go lower. Look, I mean, it got down to 10, got down to 9 and change. At the low, it's showing of 10.17 here. Yeah, so it could get lower, certainly. Now, it can't get that much lower, though. It can get down to 10. In the meantime, this is the VIX spot price. Let's look at the futures. The futures are trading higher than where the spot is. And we can go to VIX Central to look at the futures. Here's the chart. And what do we see when we see this chart? Well, first of all, we see that there is a healthy space between the spot price, 14.32, and the first month future, 15.85. So that's $1.50 in the spread between these two. And that is a reasonable spread, which harkens back to 2017. That's the kind of spreads we were getting then. And I would propose to you that these futures are a little stubborn at rushing down to that 14 level. They're a little skeptical of it right now, it appears to me. There is 3.4% contango. Okay, so what does that mean? That means that over the course of a month, all things being equal, this whatever VIX ETP you're using is going to decay by 3 3.78%. So if we look at VXXB, for example, VXXB is trading 31.96. So if we take the rate of contango, so 3.79, 0.0379 times 31 equals 1.17. So what that means is in a month, all things being equal, this thing's going to go down by a little over $1. It's going to decay by a little over $1. And the reason it's going to decay, once again, is because as this is rebalanced every day, they're selling a certain percentage of this front month future for a lower price than they are buying this April future for. And so as time goes by, these futures are falling down towards the spot, and as we roll out, it gives more room for these futures to continue to fall towards spot, and thus the ETPs decay. So, you know, not a huge effect, but over a month, this thing is going to go down by $1. Now, over a course of a year, that's a lot, right? I mean, the things, but over the course of today, in the next 10 minutes, whether this is going to go up or down, who knows? And B, certainly there are many people out there in the world who would say, oh, well, this is a great time to buy the VIX because, look, it's been going straight down. It's certainly going to retrace. And we know the VIX sort of oscillates back and forth, up, down, up, down, up, down. So, you know, insert your brothel joke in there somewhere. So is this a good place to buy it? I don't know. You're going to have to figure that out for yourself. We could say that this is a medium level. We could say it's high for last year. It's low for this year. What I do know is that I have been a little short for a while now, and I know that this thing's decaying by $1 a month. So if I stay a little short, I'm on sort of the right side of the trade. But minute to minute, day to day, we don't know exactly what's going to happen here. But the chart, if we go back once again to VIX Central, this chart looks normal. It looks healthy. It looks like just business as usual in the stock market, basically. That's what that particular chart looks like. As far as options volatility, if we look at UVXY, the options on UVXY look cheap. Why do I say that? Well, we've seen volatility in UVXY a lot higher than it is right now. We're showing the front month 67, 68 volatility, 79 as we go farther out. We've seen these up in the hundreds, certainly, but the reason it's cheap is because, you know, volatility has been falling for a period of time now, a decent period of time. So it is what it is. Now, you can see if you look closely that I do have some position on here. So if we go to option statistics, it shows 52-week volatility low of 68, which is basically pretty close to where we are right now. High of 190 volatility. This analyze tab on Thinkorswim can be very useful at establishing where in the volatility range we are right now. So implied volatility on the top here, 52-week IV. Implied volatility is going to tell you options prices, okay? Historical volatility is going to tell you how much the underlying is actually moving around. This number, implied volatility here, is an average of different months of options. Now, our options also have a skew on them. When I look at this number, 81, I think to myself, well, the actual volatility of the at-the-money straddle in UVXY for, like, let's just take March 23 days out. we could use 45 for at the money straddle. It's showing like, well, it's weird. The call shows 72 and the put shows 78. So let's say at the money straddle 75 volatility. So that's low for UVXY. Does that mean it's a buy? Well, not necessarily. You could sell it. You could sell that straddle and still make money on it because stuff's just not moving around that much. And when it does move around, it comes back. So maybe it's justified to be low. Just because the volatility is low doesn't mean it's a buy. But it does mean that you probably don't want to lay into selling a whole bunch of options at a lower volatility. Better to hold off till you get a pop to sell some stuff, maybe. But for those of us who have traded the VIX for a while, what we try to avoid doing is being short all the way up on the, when we get these pops. A lot of times we find ourselves short during the pop. So what we try to avoid doing is being short during the pop and long during the way down, which can happen at times. Sorry for that heavy breathing thing. So my point is, once we get the spike, I try to maintain a little bit of a short delta and hold on to that short delta so that I'm short on the way down like I was short on the way up. So so even down here, when we're down to 45 again, I'm still short a little bit of UVXY because I was shorted on the way up from 35, so I'm going to be shorted on the way back down to continue with this trading position, which I always have. I'm somewhat of a perma bear in UVXY and TVIX. I'm always slightly short, and when we get the spike, people are going to criticize me for that, and when we get the down move, nobody says anything, and that's just sort of the way it is. You can see the all-time low in October, which we should get to sometime this summer, is my prediction, UVXY. All right, so that is some of what's going on, and let's check in with the chat. Hi, chat. And what's going on? Dave Modell, how you doing, buddy? And thanks for everybody for your support. We can see underneath here, I have the level 2 chart, the level 2 trading platform on here. And let's just focus in on that for a second. I want to go into mechanics of trading a little bit more. And I will be, there's a level 2 chart right there. I want to go into mechanics of trading a little bit more coming up and really focus on that for people. This is a level 2 chart, and I moved it up too high maybe. And so these are different companies that are market makers or different exchanges. You got NASDAQ, Edge, Philex, blah, 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 blah. And there's a ton of different market makers out there making markets. This used to be like 3 or 4 people. Now it's like everybody and their mom has their own market making firm. And a lot of these guys are off the market, but still it's pretty amazing how many people are making markets. So what's going on with me right now? Well, I've got some small stuff on. I just sold like a little out of the money put spreads. I'm short a little bit of UVXY, as I mentioned. I'm short a little downside in Tilray. I'm short a little downside in Tesla, which is biting me right this moment with Tesla down $5. Let's look at Tesla for a second. So the thing that I've sort of latched onto with Tesla is that it seems to trade in this range. And so you can see it gets down to like 250, and then it gets up to 380, and it just seems to trade back and forth in that range. And so my idea is to kind of sell a little bit of puts down at the lower end here, and a little bit of calls at the higher end here, and hopefully collect premium over time. And so I have a little bit of that going on right now. Let's see what we got going on. Although I'm getting a little bit burned here. So I'm short in Tesla. I'm short the April 345, 350 call spread. I'm short the April 265, 260 put spread. So that's exactly what I was just describing, with a chart in a range. So a little bit of upside at the top end of the range, a little downside at the low end of the range, and hang out. That's my strategy in Tesla, but it's very small, and their call spreads are put spreads, so I know how much I can lose. Tilray, same thing. I look at the chart and I see it's moving less and less as time goes by, it seems. So I sold a little bit of put spreads to the downside, call spreads to the upside. It's kind of like selling strangles, but a little bit safer in that I know exactly how much I can lose. So I'm short the 15 March 67.70 put vertical. Let's go back here to the chart. All right, so yeah, so I'm short 67.70 put spread, stock 79 right now. I'm short some call spreads a little bit higher up, and just kind of saying, well, this thing, if I sell these out of the money calls, now the money puts a couple months out, as time goes by, they're less likely to hit these things, and I collect a couple bucks as time goes by there. Doing a little bit of that in this particular issue. Similar situation in Tesla. And similar situation for me in Amazon. Let's pull up Amazon for a second. And I'm just doing this very small, so that if I'm wrong, well, I lose like $100 or something, you know. If I'm right, I make $100 in the next 2 weeks. If I'm wrong, I lose $100 in the next 2 weeks, that sort of thing. So Amazon, I believe I'm very wrong on this one because we're down $12 right now. I believe I'm short the 1630, 1627 put spread. And so that one's going to be a loser. Let's take a look. Okay, so Feb weekly in Amazon. Let's see so that you can see this well, what the position is here. And move this over. So the Feb 1630, 1627 put vertical. It's a $3 put vertical that I sold for $1.15. So I can end up losing, $1.85 on that whole thing. In the end, I've still got a couple days left though, and even though it's down $11 today, that it's a $1,600 stock, so I still have a little time on that one. But yeah, this is some of the little stuff I've been doing, but kind of just biding my time. I would much rather right now hold on to what I've made so far this year and just be ready for the next opportunity. It can be hard sometimes because you want to trade. You definitely you want to you want to get in there and do stuff. You're like, oh, I watched a couple videos, or my account is set up. There's money in there. Let's do this. And the hardest thing is to bide your time for opportunities. Now you can be looking for opportunities all the time. You definitely can do that. And I've discussed this before, but let's just go again to one of the ways I look at opportunities, which is a free website called barchart.com. Now this is for options opportunities. I'll go to options and I'll look at highest implied volatility, and I'll look at most active options, unusual activity, and I'll just pull up stocks. And I want to pick stocks that are the higher, to me, the higher the price, the better almost. But I do like that range from like over $20 and under $200, something like that. And then I'm just going to look and see what catches my eye. Now this is going to show volatility. I don't know if that's volatility. That's going to show volume there. But a lot of these other spots are going to show volatility. Change in volatility. There's a good metric. So CGC, the canopy growth. I've noticed that this has been, the volatility has been cranking up a little bit on this lately. A lot of these, you're going to see it's going to be like a false flag or a false positive. It's just going to be like one option that was like 10-cent bid at 50, and 50 represents 100 volatility or something, but it's not really. So you want to try to isolate the actual stocks that have a higher volatility from some that are just like weird prints and stuff. So, for example, this Riot here, okay, the stock's only a $4 stock. It made a big up move yesterday, and, you know, I'm not a huge fan of blockchain stuff, but when I have a $3-4 stock, it limits my what I feel comfortable doing. So if we're just to pull up Riot, like let's say someone said, okay, you have to trade Riot, and the only way you're allowed to make money is trading Riot. What would I do? Well, let's look at Riot. Now, like I said, I don't like blockchain stuff, and I would, if I had a gun to my head, I would probably want to short blockchain stuff. But the thing is like, how much do you really want to short a $3 stock? I mean, it's, you know, the opportunity is limited. So let's take a look at Riot options. Now, with a $3 stock, these are going to be big percentage type plays here. So 9 days, 3.5 straddle, 80 cents. So this thing, you know, this thing's moved in the last day. So it's probably going to, the chances are it's either going to fade completely back to where it was, back to like 2 and change and do nothing, or we're going to get a bigger pop. But probably the action is over for the moment. But yeah, it's tough. It's tough to know what to do. I mean, if anything, I would feel safer buying this than selling it, because the last thing you want to do is like short something that's like $1 or $2 and have it blow up in your face. I'm not a proponent. The guys that make big money trading penny stocks, the way people make money in penny stocks, the guys that make the big money are shorting them, because 9 times out of 10 a penny stock fizzles out. Now this Riot could be considered a penny stock, but it's not like your typical play, like pump and dump penny stock, in that like it's very well known, and it's much more legit than that sort of stock. But if you look at this now, the most likely thing that's going to happen is it's going to settle down a little bit and maybe go to like 325 and sit there and do nothing. So if that is our hypothesis, it's just going to sit at 325, then what could we do? Well, we could sell some out of the money call spread maybe. So 23 days to go, we could sell the there's not that much meat on the bone here. What do we sell? The 4 or 5 call spread. So you sell the 4 call and you buy the 5 call. So you're collecting 24 cents. You're collecting 24 cents to make, I'm sorry, you're betting $76 to make 24. So in 23 days, you can make $25, but you're betting 76. So this seems actually percentage-wise a decent trade. If your supposition is this thing's just gonna probably just crumble and go back down and just sit there and do nothing, then this might be a good trade to do. But there isn't a whole lot of meat on this bone here, and you don't want to be just naked short this, because it could explode. There's no reason why crypto can't explode again to the upside. Like, although I'm a seller of crypto and I don't really believe in it, I do understand that the mania could pop back up, or something could happen that we don't know with this company that makes people interested in it, and it could pop very easily. So there you go. But, you know, if you think it's just going to fade, like most things just fade back down. So if you think it's just going to fade back down in the next 23 days, you could put this trade on, right? You're betting the most you can lose is $75. The most you can make is $24. If you know, it just fades back, you're going to make $24 each time. So let's just put this trade on. I like this trade. Let's put it on 2 times. So we make $50 in the next 3 weeks if this thing just fades back, or we lose $150 if it doesn't. Let's put it on 4 times. So we either make $100 or we lose $300. And I'm putting an offer in at 24 cents, which is not getting filled right now. That's exactly mid-market. So are we willing to go down a penny? Let's go down a penny. See if we get filled. All right. So it looks like we sold our spread, our call spread. So we sold for a call spread. So we're either going to make $100 or we're going to lose 300 or somewhere in between in the next 23 days if this thing just fades back. So that is probably the trade I would do if I had a gun to my head in Riot and they said I had to trade Riot. How did I get to that trade? Well, kind of by process of elimination. I don't want to just short this thing naked because it could explode to the upside. I don't really want to buy it right here because it's already like kind of elevated from where it's been. And, you know, you got this high and then came back down. Then we didn't make a higher high today. We made a lower high. So it looks like it might be the fade. Anyway, that's my process for that one. I hope you find it interesting. Like I said, working on more like produced videos that you can come back to over and over again. Let me know which kind of stuff you like watching, and I will try to accommodate what you like watching because the channel is here for you guys, not for me. So there you have it for today. I do have 3 more of those SIBO back in the day videos in the hopper. We've got I've got 2 that are ready to go. One is actually making money, and the other discusses selling cheapo options and why you shouldn't do that. And the other discusses the concept of a boat person at the SIBO, which is somebody who jumps from pit to pit. A boat person is not meant to be some people I think today would say that's not a PC term, that it's racist or something like that. I don't mean it in that way. It's funny, I put up a title, boat people and selling teenies. Teenies are options for 1/16th, which used to be the smallest amount of an option you could sell for. Nowadays they're in pennies, but back in the day it was 6.25 pennies was the least you could sell an option for. So I put this title, boat people and selling teenies, and they blocked my video on YouTube right away, said it wasn't like suitable for advertisers. So I had to re-upload it with a different title. These are the games we play on YouTube. All right, folks, thanks for watching. I gotta go somewhere, so we'll see you in the next one. Let's put some closing music back up on here. And that is the end of the show for today. Thanks.